I actually had this shower thought recently thinking about manager risk. So, just to recap, the types of risks that an investor can take. And also, when I say that an investor can take these risks, I don't say that they're wrong for taking these risks. You just have to understand that you have to take one or more of these risks in order to earn a return, because you can't get risk-free return unless you invest in treasuries. Everything else bears a risk, and in order to achieve a return, you need to take some risk. So for an investor, there are a few different types of risks you could take. You could take market risk, you could take business plan risk, you could take financing risk, you could take manager risk. So when I say manager risk, there's a risk associated with investing with manager A versus manager B. For example, if you're investing in a sponsor who's doing their first or second or third deal, that is a higher risk than investing with a sponsor who's done 50 deals, right? It doesn't mean that the sponsor that's tenured with 50 deals is going to provide you a better outcome. There's no guarantee, obviously, right? The G word's not in our vernacular. However, it's logical to assume that you're taking more manager risk on an emerging manager rather than a tenured manager. So, with that being said, though, I think a lot of people actually find value in taking manager risk. For example, shout out to JC Clemens at Flagship Capital. They actually have built their business
on manager risk.
On manager risk, right?
For
they
sure.
are looking for, and if you bump into JC at a conference.
And let's not be too quick to not shout out Brian and Garrett. Great people over there.
True, the whole Flagship team.
Yeah, everyone there is just salt of the earth, just the best people.
They're lights out. So they are specifically seeking sponsors doing their second to, I think, 9th deal, they say. Right? So they're looking for that sweet spot of emerging manager where they are taking more manager risk, but they feel like through their due diligence process, through the expertise that they bring to bear to the deal, they can actually overcome that manager risk, pick the right people, and in the end do better because their thesis surrounds, okay, we're going to find younger, newer sponsors who are going to work harder to earn my dollars a return, and they're going to be more vested in the success of the deal, and they're going to be able to negotiate more favorable terms for themselves and their capital because they're dealing with an emerging sponsor rather than a tenured sponsor.